You also, the only thing I would caution people about is it's shark infested, meaning that if you come in not knowing anything, you will get eaten alive, right? I mean, there are people out there that. So I first started in .com bubble. This was back in like the late 90s, and it was all play money back then. So I didn't have any money at the time, but I got addicted because of these crazy moves that were going on, just like a crypto going from a penny to 10 cents, like a Dogecoin, a Shiba Inu. Some of these .com companies did the same thing. And I just watched fake money explode, right? 100,000 to 300,000. And it addicted me. I'm like, if this was real money, I'd be pretty well off, right? And so I right there and then I was like, I'm going to learn how to do this. It literally took me years to figure it out, where I would have my small account, I'd lose it, I'd blow it up, just everything that everyone in crypto is probably going through right now, because I didn't have a thesis. I didn't have a core about why I was making a trade other than, I was following everyone else. And like my mom and dad always said, if someone jumped off a building, would you do the same thing? No, right? So you have to figure it out for yourself. And I started to look at the charts. I started to see repetition in the charts. When this happens, the result is 80% of the time X or Y. So let's start trading that way. And so I started to create this thesis about every trade I get into. Why am I doing it? What are the factors? And before you knew it, I started to make money trading, and it's only gone up from there. So that's a real crash course in it. Yeah, and I always like to say too, folks, is like a couple things. Number one, I'm not any more intelligent than anyone else. I guarantee it. It's just work ethic and studying. And like, think about a brain surgeon. I love to use this analysis is like a brain surgeon can't watch a video on brain surgery and go in and be like, all right, I'm gonna pay me $500,000 every year. I'm gonna do brain surgery for this hospital. It takes study, it takes dedication, it takes schooling. And again, if in the markets, I make more than brain surgeons, right? So why wouldn't it take at least as much effort to get to that point? The only difference is I do it in my pajamas sometimes, in my undies, like whatever. You trade from home, you do it on your own time. You want to travel to Europe, you can still trade if you have an internet connection. It is the most beautiful job in the world. I mean, inflation is still it is high in terms of like people. If you go to the grocery store, if you buy anything these days, I mean, prices really have gone up. So he's been feeling the pressure, I think, politically too, right? I mean, you're in a midterm election year. Biden wants to have a shot at keeping the Dems in control. And so people aren't happy that when they go to the store or they fill up their gas tank, it's costing them a ton of money. So we have to get inflation down. Inflation really is something that sucks, because if you have a 10% inflation rate, it means that $1 you have today, next year, it's only worth 90 cents, right? And so if you think about that, the money you're making today, if inflation stays high, it's worth pennies on the dollar in a few years. And that's why, you have to bring down these inflation numbers. So again, the idea here is he did raise, he's been raising a lot. The reason, and this is really counterintuitive, the markets are ripping right now after he raised. And most people would scratch their heads and say, why is the market rallying on this? And the answer is this, is even though he raised 75 basis points, he basically threw the market a bone, saying, we're gonna be a little bit more cautious. We're getting close to the end of hiking. So basically right here was where the announcement came out. So you could see what crypto did from that point, just ripped to the upside on his slightly dovish side. Dovish, by the way, that term means that he was more nice to the markets in terms of his commentary. He wasn't so hard-nosed. The other term is hawkish, where he's going to raise more and more and just kind of crush the markets. So he was a little bit more dovish. The market loved that. Bitcoin loved it. We've seen all of crypto rally here. The stock market's rallying. And in all fairness, I mean, we've gone even as far as to see the US dollar starting to come down, because let me put up the DXY. This is the dollar, and look at the dollar collapse on that statement. So
wow.
The dollar had a big drop here. And the idea here is that if he's not going to raise as much, then it's likely that he'll start printing again. Therefore, that's more dollars in the system. So this is very whacked. I mean, trying to describe the way this is all working together is really messed up, because you could say, okay, well, if he's going to print more money, then isn't that bad for inflation? But the markets are more worried about a recession right now than the inflation side. We know the inflation's coming down. Look at gas. All these things have collapsed. Let me show you guys some other really cool stuff. So a lot of people, I was bearish when we were at 60, 68, 69,000. The charts were telling me that was going to happen. You have something called an M double top up here. This was a classic sign of resistance.
Yep.
The market again. So again, the market was guiding us that this bearish market was coming into play. Interestingly enough, I went bullish down here in the near term. I have a short-term price target of 25.5, maybe 28 to 30,000. I'm going to show you why. Just some cool stuff. So number one, here's your 2017 high. Draw a trend line straight and look at what you just hit. So
oh, wow.
Basically the market stopped right at that 2017 high. Technically speaking, there's going to be some buyers there that are saying, oh, remember when it was at that level? Let me buy into crypto here. So that's what happens here. So we're going to connect these lows here, all of these lows, and I'm going to stretch a line right up. And look at how there's symmetry in that we hit the low, we came up, we touched here, we came down here again. We then came up, then we came down again, then we just hit the high, then look at what we did yesterday. So if I came to you yesterday and I said, look at, we're at support, and support means you're at like a floor, you're standing on the floor, it's supporting you. And I said, what do you think crypto is going to do tomorrow on the Fed? You would look at this chart and say, well, it's on the floor, so it can't go down any lower. It's standing on the floor, so the path of least resistance is to the upside. So, I mean, again, this is just a crash course in like simple technical analysis. But the fact that you were right here yesterday, you were on support, chances are, and just look at what the chart's done. It's basically gone to the highs, comes to the lows, then goes up. And so it's almost like this is as a trader what I do. And I'm able to kind of just notice these little things forming and saying, okay, well, probabilities. And by the way, in technical analysis, there's no such thing as 100%. You're going to be wrong occasionally, but it's about getting right as many times as possible. Here, let me just show you this, because this will make a lot of sense to you. So you're right. These type of patterns happen all the time. Like, so for instance, look at this. Same exact thing right here. So you just basically played pinball inside until, now this is one of the things you have to be careful about if you're in crypto. What did this pattern do? Eventually, it broke lower. So you have to be a little careful because the same thing is occurring here. Even though I think we're going up to at least 25.5, which would be this upper area here, I would be a little careful because it does potentially signal at some point we could come down. Now, the beautiful thing about technical analysis is if it breaks above here, guess what? Now it failed. Now the bearish pattern failed. Now you think about further upside. So there's not only levels to buy, but also there's levels to say, okay, now it's broken where it should have pulled back, and now it can go up more because it's broken that level, right? Then you bounced down here, then you went up to here, then you came down here, then you kissed down here, and then you finally broke out. What's the difference between this one and this one, right? This one's down sloping. This one's upsloping. So see how this pattern, which is the same pattern just at a different angle, versus this one downsloping channels are bullish and you got the breakout. And again, bullish means it's going to go up. Upsloping channels are bearish. Notice it broke down.
Wow.
So, again, so you start to see these things where it gives you clues. It's like Blue's Clues. It's like dropping little clues here left and right about what the ultimate outcome could be, or at least the higher probability outcome is. And as a trader, you have to be able to read those, and then you can position yourself to maybe make money on them. It's really daunting when you don't have a back. Like when you're brand new, it's pretty daunting because it looks like a bunch of jumbled nonsense. But when you start to really look into it, there's symmetry in the charts that's just fascinating, and it really does give people an edge. It's the only way I've ever found to trade profitably. Otherwise, you just kind of buy and hodl, right? And you hope, which is fine as well. If you have a long enough time horizon, I really truly believe hodling will be fine. But it's like, for me, I always look at it and I'm like, well, if I know price is going to go down, why wouldn't I exit and then just buy lower, like those type of mentalities. And then I just get a better entry price and I can buy more coins instead of less, and and that kind of thing. So bottom line is, just to go over how I get my price target, there's something called a measured move in technical analysis, which is again, one of these freaky things in symmetry. But let me show you this. So if you take this high of 69,000 and you drop it here to this low, so you can see this is a pretty direct drop. Then you went into this sideways pattern, which we had shown before, right? This parallel sideways. So what you do is you take this distance here to this distance here, and you take that distance and you take this high pivot and do that same distance drop. and what you get is $12,000 to $13,000. So the idea is that this will replicate here when all is said and done, and then that has a good chance of being the absolute bottom on Bitcoin. So there's no guarantees again, but for me, that's where I will buy the majority of my Bitcoin. Having said that, technicals don't always play out. And so when we were at 19,000, I actually officially started my HODL position. I took, and just so everyone knows, I never buy all at one point. I'm a big dollar cost average person, DCAing, right? Because I've been wrong enough to know that I'll be wrong again. And so at 19,000, I said, okay, well, how much money do I want to put in my HODL portfolio for Bitcoin? And so I selected that amount and I took 1/6 of that. So yeah, I mean, definitely bear markets are a trader's market, right? I mean, we know that there's a majority of people that are holding Bitcoin. They bought like north of 55. So, I mean, everyone's or not everyone, but a lot of people are underwater at this point. So this is a great market where traders will make money. Volatility is what gets you money. And again, just looking at that Bitcoin chart before, we saw how you could buy it every time it hit that line and make a nice little move. And then you exit and you just do it again and kind of rinse and repeat. And while price overall is just going sideways, you're able to make money after money after money. So it is definitely a trader's market. You also, the only thing I would caution people about is it's shark infested, meaning that if you come in not knowing anything, you will get eaten alive, right? I mean, there are people out there that know what they're doing. You're gonna not control your emotion. You won't have discipline coming in, two key components, and then you have to learn how to read the chart. So I don't want to say everyone should go out and start trading because you'll lose your money. But what I would say is start exploring it, start researching it, learning about it, and then if you want, dabble with like a few bucks. Prove to yourself before you put big money on the line, because I can speak from experience, folks. It's like early on, I didn't know what I was doing and I like just kept losing and losing. And of course I'd win some too, but then I would make a mistake and I'd lose like 50% of my account and I'd have to like start over building it up again. And so you just want to be aware of that. Be ready for that. That's going to be an additional learning curve once you get into real money that you have to deal with. And it is a hard one. I mean, emotion is we're all built with emotion. Human nature has emotion in it, and you can't. You have to be a robot. Buy this level, sell this level, do this, do that. Just act like a robot and don't think about it. You sometimes can be your worst enemy. And I think we see it in this market, right?
100%.
How people are just getting depressed and they're getting kind of like negative. And usually that's the sign that we're close to a near-term bounce, is when people throw in the towel. And we've actually seen that recently, right? So be aware of that. And the same thing likewise is like, think back, and I hope everyone learns from 69,000 when we were there. Think about how much bullishness there was. Everyone calling for 100K by the end of November, 250 by the 31st of December. And think about how that was the opposite. It was actually the opposite of what happened. So next time, if anyone's watching and listening, think about doing the opposite of what everyone else is doing, right? If you do the opposite, it's usually the right move.